What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's traded in the U.S. stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks to all those who continue to tune in. We enjoy your company. And if you haven't already, make sure you hit that subscribe and notification button as well. That way you're alerted when we release new videos. We do drop bonus content from time to time, so you want to make sure you're alerted to those. Now, the nightly and weekend videos, like tonight's video, we mostly identify triggers and targets for trades ranging from scalps and intraday trades all the way up through long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts, the broadening formations, the support and resistance levels, things of that nature, make sure you check out that bonus content that we talked about. If you'd like, a free PDF with a quick reference for the strat, which is the base of our charting and trading method, make sure you check out the description of the video. There's a free PDF in there for you. So let's go ahead and get into the video. I do encourage you to watch the full video because along with the triggers and targets, we do cover some pretty good information on all time frames. So let's look at the agenda for today. First, we'll recap the price action from today, Wednesday, December 17th, and then we'll zoom out like we always do to level set and look at the week, month, quarter, and year. We'll zoom back in at that point and set our 4-hour markers and the triggers and targets for Thursday, December 18th, and then we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. So let's take a look at the intraday price action, starting off at the 5-minute like we always do. This gives us shows us a way that we can get early entries or into positions for whatever direction price may head that day, or if we've got chop. This is a simple and proven way that you can get an edge when it comes to scalping, right? So the general rule is looking for higher lows at or above the opening print or the first traded price of the day. If you get a higher low above opening print, then you want to get into some calls and look for overnight high or previous high a day as your target. If you get price action to the downside after price opens in the day and you get a lower high at or below the opening print, then you want to look for puts, and you want to target the overnight low and previous low a day as your targets. So here we have on the chart, let's first point out the 4-hour markers. At the top of the chart, we have the overnight high, this blue dashed line, and then followed by the previous high a day, this orange solid line. We've got the overnight low mixed in here with last month's low and the 4-hour trigger to the downside. And then we got the previous low a day just below that. Some honorable mention levels that we should point out here: this purple dashed line, the small dashed line, that is last week's low. So we want to keep in mind where that is. This green dashed line is last month's 50% level. And this yellow solid line is last quarter's high. Now, I know those just by looking at the lines, the different colors and the types of lines that they are. So that, again, goes into our color coding system and things of that nature. So if you're not familiar with this, check out our bonus content. But anyways, let's dive back in here. So we want to look, let's make things a little bit wider just so we can see how the morning opened, right? For those of you on a phone, make this a little bigger for you. So we can see here we got the opening print, this price level 1 here, this peach dash line here. This is the opening print level, and it's right at last week's low, right? We get a quick pop up to the upside or a wick, and then we start to immediately fall, right? So let's take a look at the 1 minute. Excuse me. And we had some pretty good volatility in the overnight. So we dropped, we peaked, but then we had some, I believe it was a Fed speaker that came out and started speaking, and we had, a big drop right before the open. So we already had some momentum going to the downside right when things opened. But if we look at the open, right, here's this push up. This is the 1 minute. So here's that wick on the 5-minute. And then we push down. We make a lower low. We come back up. We make a lower high in comparison to what the high of the day was at that time. And then we just start to fall, right? Let's go back to the 5-minute, and actually let's pull up the internals. We can see here the tick open right at 0 line, and just flashing, right? So not a lot of information that we can get from the tick. The vol QD was a little bit more telling because we're right at the opening print line and already starting to push down. Made a little bit of a higher high, but not much, basically an equal high, and then continued to push down, then falling under the 0 line. And then with the 80 QD, or the market breadth, we did open and money did spread out essentially. The breadth went up, but then money just basically started getting sucked out of the market, as you could see by the vol QD, which was the last chart, and then the breadth just falls away as well. So nothing bullish in the internals at the open, right? So nothing, not really looking to get into calls there. And oops, there we go. Let's make this bigger. If we get back to the 5-minute and look at Wednesday's action, that's better. There we go. Right, so we got a lower high below the opening print. So the general rule, lower highs at or below opening print, we're looking to get into puts. So once we push down below this this area here to lock in this 2 and 3 as a lower high in comparison to this high, we went ahead and entered puts. We got another lower high, and then kind of just gave out, right? Now, we talked about in weeks past how the tops or bottoms of gaps can be bounce points intraday if there's not a lot of momentum. We thought that could have been the case here. Started to see a little bit of lift, but we put in a lower high at that point and then went and closed the gap. At that point, we let go of a majority of our early morning position. Once the gap was closed, left some runners to see if we could get the last quarter's high to be touched and possibly even break into last quarter's price action. But it was just kind of a slow melt the rest of the day, and then actually ended up just going sideways. We did sell the rest of the position that we got into today at the close. Because of the structure that was set up and frankly, kind of exhaustion that we could be in. If we go to the 4-hour, right, and we take a look here, let's get a cleaner chart. Oops. So we can see we had a 3 in the first 4-hour candle of Wednesday, and then a 2 down in the second 4-hour candle. Now that 2 down has more wick on the downside on the bottom than it does the up. So kind of a hammerish structure, but it was still red, meaning we closed below where the second 4-hour candle started. But we do have that little bit of wick there, showing that hey, maybe we do have a little bit of biting here from the bulls. Now, part of this could have been because Micron had earnings after hours today, and so there may have been people putting some money in on the call side or buying shares for that matter, to capitalize on any pop that we may get from the earnings report and guidance from Micron. So that could explain it, but we went ahead and exited our position. If you look at RSI on this 4-hour, it's down here pretty low. Let's look at the day. We didn't even check the day. The day is pretty low, but it is still pointing down. So definitely could have some more downside action to come. But from a 4-hour perspective, it gave us this 3-2, and so we could possibly get a 3-2 down, 2 up on Monday. First 4-hour candle of Monday of Thursday. And you can see there's a lot of magnitude there. Not saying we would close this whole, not saying we would complete the full strat, 3-2 down, 2 up, and get back to the top of this 3 by the end of the day, or even by the end of the 4-hour candle. But we would have that magnitude there as a possibility, right? That could be, if we do bounce here, right? We could be looking at, not on the day, but on the week. If we bounce here and we push back up through the end of the week, and then next week end up going 2 up, this could just be another higher low in the sequence of lows and highs that we've been having, but it is coming from a lower high. So again, we've talked about this over the past few weeks, and ad nauseum, really. We could just be going into a range here, right? Just because we've made this lower high, and we're in this, pretty big red candle on the week, doesn't mean that we're going to go make a lower low and start a downtrend on the week. We could just go sideways. So Look for that, even if this isn't the low for the week and we continue to push down, as long as we're staying above that higher low on the week from 5 weeks ago now, then we're still okay. It still could be just ranging. Let's get back to the day chart here just to finish things up. But yeah, from the day, again, big red candle. So even if we do bounce in that first 4-hour candle, we've got to look at resistance here now being the month flip, right? That tried to act as support yesterday or on Tuesday, but fell through today. So that does line up with the 78.6 fib extension from the April 7th bull flag that we've pointed out multiple times. We'll check that out on the week here again, but so watch for any resistance here, even if we do bounce in that first 4-hour, even the second 4-hour candle of Thursday. We could see either a rejection or just sideways action. So just keep that in mind as we continue to push up. Now, if we were to go 2 up on the day, then that'd be a pretty big move. We'd have to move $4.50 essentially. So after a $4.50 move in the opposite direction, is there a high probability that would happen? Probably not. It could happen. It's SOXL, but we've got to see, right? We had Micron earnings after hours. They reported pretty well, and I had actually good guidance as well. So they're up, 7% in after hours, which has helped SOXL. SOXL is up 2.55% in after hours. So looking pretty good from that perspective. But we do have CPI and employment numbers that come out in the morning. So could those be the catalyst to continue to push up and give us that 2 up on the day? Possibly, but just remember that we do have this resistance here. We still got we're at about $37 right now in after hours, so we'd still have $2.50 till we get to this level to push up where we could see some rejection, right? So just want to keep that in mind. That's enough about the day, right? We kind of started to talk about the week, how we could set a higher low. Here's the, come on now. There we go. Here is the bull flag that we were talking about. Let's make this to where it will fit. Right, here's the bull flag. Here's the April 7 low. Here's the flag pull. Here's the flag, and there's the bounce from it, right? These fib levels are fib extensions from this bull flag. So you can see we went through the 100, almost got to that 132, came back down, tested the 23.6, really found support of the body right here, more around the 50% fib extension. Tried to get that push again, reached that 100% fib extension, but ran out of gas, rejected by last year's 50% level once again, right? Making that lower high and pushing down again. So we just want to make sure that we get that higher low. If we do get it continued push down, look for some support at the quarter flip. That's where the quarter opened up, which does line up basically with the 50% fib extension as well. So further push down, look for 34, 33 area to be support. If we fall through that, last line in the sand at that point is basically this 28.13 level. If we break below that to close this gap, then we're making a lower low on the week coming from a lower high. So again, not calling for that to happen. We just want to be prepared on both sides of the equation and have our triggers and targets ready. So if we do get that downside action and make a lower low, all right, now the bears are more in control, and we've got to continue to look at more downside action. All right, that's the week. Let's look at the month real quick. Not too much to say other than we've now flipped red, right? So we were looking to put last month in as a higher low, got up, almost went 2 up on the month, weren't able to get it, and now we've had this pullback. Now we are still an inside candle, still quite a ways to go before we would go 2 down on the month. So not saying that would happen. This is the last full trading week of the year, so only 3 days of trading the next 4 days of trading the next couple weeks. So not a whole lot of time left to continue to push down and make that 2 down. But hey, you've seen how far we moved in just today alone. So we've still got to talk about it. It's still a possibility out there. If that's the case, not a big deal. It is coming from a higher high, right? Here is a solid lower high in that downtrend, but we pushed up, breached that high. So this is a higher high in terms of a trend count. We have a soft higher low, so it is somewhat of a trend, but it's still beginning of a trend. So there is still room to pull back and make a higher low on the month perspective before we would make a push back up, if we are to push back up, right? So again, nothing breaking down past the week at this point. Week and month are still looking good, or not necessarily looking good, but nothing's broke down, right? We're neutral, right? With a little bit of a bearish edge, but we're neutral from a higher time frame perspective. And that comes more into play here when we look at the quarter, right? We did trigger the one combo 2 down, combo 2 up. That did trigger at 36.15, but we are no longer in force. We're just barely no longer in force, right? We've pulled back below that 36.15. We closed at 36.10, but with Micron earnings, we are back at 37.14. So back above that 36.15 level, which keeps this 1, 2 down, 2 up in force. The magnitude for that move is up here at 70.08. So, we want to continue to try and reach that target, but we do have to compete with some of this resistance. Right now we're back below the month flip. We've been below the week flip, the last year's 50% level, which has been resistance for us many times here. Let's just look in the recent past, right? If we go to the day chart, there we go. If we go to the day chart, we can see it was a resistance, a little bit of support, but then resistance, little resistance again, right? So that's how that last year's 50% level is acting as a major resistance level for us. Let's see if we can go back a little bit further too. Not a lot past, once we kind of broke below it, we never retested it. So these are the first real retests of that level, especially from like the week perspective, right? Those are the first 2 tests. And then if we look at the month perspective, which we just came from, this is the first test from the month perspective. So it's very reasonable to expect, that to continue to be a major level of resistance, right? And we've seen that. We've talked about that. Let's go a little bit further. We just talked about the quarter. And then if we look at the year real quick, right, we triggered the 1, 2 up, 2 down on the year, but able to make a higher low so far. Had a little bit more of a hammer candle the past, a week ago, but with this pullback, we've got a little bit more wick on the top, starting to turn more into a doji, but it is green, meaning we're above where we opened. And, we've still got the we still have the 2 down, 2 up possibility in play for 2026, right? And then again, that magnitude is 70.08. So 70.08 is that magic number. But just to recap, it's only shorter term time frame, day and below, that are kind of breaking down the week and above. The week is neutralizing. The month is neutral to bullish, but from a high time frame perspective, we're still looking good. Let's go back. Let's get the right chart here. Let's go back to the 5-minute chart and talk about the plan for tomorrow, Thursday, December 18th. First thing we want to do is identify our 4-hour markers. So we have our previous high a day up here at 41.32. Previous low a day down here at 35.70, I believe. Overnight high as of now is 37.44. Overnight low is 36.45. So let's just say we get a little bit more of a push in the evening, right? And get a push up. Again, the levels, honorable mention levels we want to point out are 39.16. That's last month's 50% level, and 35.49. That is last quarter's high, right? So obviously last quarter, that was the high for a reason. There was a level of resistance at that level before we were able to break above it in this quarter, right? This 50% level of last month is a meaningful level as well, and we've seen how that's come into play in the past few days, right? You can see how it's wicked off of there. We also want to mention the broadening formations here. We've got the 4-hour broadening formation in gray down here, and the 1 hour in blue here. Also want to mention this lower high line from the 1 hour perspective. Again, we don't put a whole lot of weight into lower high lines or downtrend lines unless they are intersecting with one of our more major horizontal lines. So if we continue to push up overnight and we continue to go higher, we may want to look at this 39.16 level as a level of resistance, because we can see this 1 hour downtrend line is coming through it there as well. It's also got the 78.6 fib extension of that April 7 bull flag. So really look for that 39.16 to be a level of resistance. But just back to the plan that we have for the morning, right? Early morning, looking at the 5-minute chart, as soon as price opens, let's say we get an open somewhere in the middle of the range of the overnight range, right? Just going back to the proven strategy that we talked about at the beginning of the video. If we open here, we push up, maybe we reject off an overnight high and we pull back, but we get a higher low at or above opening print, we want to look to get into calls, and the targets are going to be overnight high and previous high a day. Now, even if we get the best entry in the world, if this is the setup for tomorrow morning, right? If we get an entry right at opening print, right, getting to overnight high isn't the most magnitude there. There's not a lot of magnitude there. So, if you're at the money, in the money, you've got multiple contracts, maybe you can let go of some of those there for some profit. But you would look for the ultimate goal for that move, the higher low move above opening print to get to previous high a day. Again, we've got these levels of resistance here, so you don't get too far ahead of your skis, right? We've also got last week's low here as well that will act as resistance before we get totally to the previous high of day. So just keep those in mind. It could be a grind to get up to previous high of day if we even get there, right? So it's perfectly possible that we don't even get there. But to the upside, we're looking for higher lows to get into calls. To the downside, if we open and we push down, maybe we bounce off of overnight low, and we push back up, but we get a lower high at or below opening print. We want to get into puts, targeting overnight low and previous low a day. Obviously, not a lot of magnitude on those moves. So if we do get to previous low a day and price keeps going down, we'll flip and look at our 4-hour triggers and targets and our 1-day triggers and targets and things of that nature. We'll get into in a second. But for the proven strategy, higher lows at or above opening print to getting into calls, looking for overnight high and previous high a day. For puts, we want to look for lower highs at or below opening print, get into puts, targeting overnight low and previous low a day. All right. So let's switch to the 4-hour chart and get those triggers and targets taken care of. Let's see. There we go. There we go. So this is for more of a full day trade. Maybe a couple hour day trade, full day trade, overnight swing possibly, depending on what we get. We talked about how we could get this 2 down, 2 up tomorrow. A lot of magnitude there, right? And that's how that could turn into an overnight swing type of trade. Not saying you would want to purchase a expiration for the 19th to swing overnight. You'd probably do better swinging the next week. But this is a setup that you would look for, especially if we close in force, right? If we get a green candle up and another green candle, and we close at towards the top of that second 4-hour candle on Thursday, we could still have continued momentum on Friday to continue and finally reach magnitude of that move, right? But the entry is the high of the 2 down, and the exit would be the high of the 3 to the left of the 2 down, right? That's just simple strat rules. One of my favorite reversals. Now, if we go to the downside, we're going to have a 2 down continuation, right? And at that point, we're breaking through last quarter's high. We want to look at the quarter flip as a level of support first, right? And then we've got some other levels to the downside, extended targets, mostly coinciding with the fib extensions from that bull flag, right? Those have been major levels of support and resistance on the way up, and we'll do this whole chop. But we'll see what those targets are here to the downside when we look at the notes in a second. But there is still plenty of room to fall to the downside. You see this 4-hour broadening formation is going pretty steep. So if we get another candle down, oops, then things could continue to just ride this broadening formation all the way down until we get to this daily broadening formation, right? That's this orange line. Let's flip to the day chart real quick so we can see where that's coming from. So you can see the broadening formation that was formed back here in mid to late October, right? We had a high followed by a higher high and a low followed by a lower low, creating a broadening formation. And this is that lower part of that broadening formation. So we could just ride this 4-hour broadening all the way down. So it'll be another 2 down continuation from the day perspective. If we get in, we're already in this 3. So general rule with those 3s or engulfing candles is, once you breach one side of it, if price comes back inside of that engulfing candle, there's a high percentage chance that you're going to go breach the bottom side of that candle. So looking for that, what is this, 3250, I'm sorry, 3205, as a possible, bounce point, which is right in between 2 fib extensions, which means, if we wick through, if we break that bottom wick through, we could bounce off of this fib extension. But We'll take a look at these exact levels here in a second. Just wanted you to get a visual of how we are in this broadening formation. And, we just went and hit the top of it. Now we're coming back down and looking to probably hit the bottom of it. So speaking of those notes, let's just get back into those. So for Thursday, December 18th, there will be 8 trading days left in 2025. Is that right? I might have to double check. That seems a little bit low. I might be off by my count, but I believe there's 8 trading days left in 2025. The close price on Wednesday, December 17th was 36.01, meaning that the week is red, right? Because we're below 43.10. So, right, these time frame continuity indicators here show that the week will flip green at 43.10. The month flipped green red today, so it flips back green at 39.59. But the quarter and the year are still green, and it would take getting to these levels to flip red. We know the market makers expected move for the week is 46.69 to 36.73. If you're not familiar with that, check out the weekend video where we dive deeper into that. And we know where the gaps above and gaps below are at all times. We just filled, not this gap, but we took the other gap off that we filled today, so it's no longer in the notes. We talked about from a scalping perspective, we're looking for higher lows at or above opening print to get into calls, targeting overnight high and previous high a day. And we're looking for lower highs at or below opening print to get into puts, targeting overnight low and previous low a day. All right. Now we just pulled it up the 4-hour chart, and we talked about how if we continue to the downside in that first 4-hour candle of Thursday, it gives us a 2 down continuation, triggering at 37.50, and we've got our extended targets here of 34.17 and 33.18. Now, if we go to the upside and go 2 up in that first 4-hour of Thursday, that gives us a 2 down, 2 up, right? That triggers at 36.63. There is a magnitude of 41.32, but we are in the face of a downtrend, and that's a pretty large move for one day. So we have our intermediate targets on the way up, right? These are levels that we could either reject at, go sideways at, could just break through them. But unless we have that type of momentum or catalyst, these are levels where we could see sideways action, right? And from the day perspective, we know that if we go to the downside, it's a 2 down continuation as well, triggering at 37.50, and we've got our extended targets here for you as well. 32.05 is the bottom of that 3 that I talked about just a minute ago. And to the upside, if we go to the upside, that's a 2 down, 2 up. That triggers at 41.32, right? So we would have to reach magnitude of that 4-hour reversal to even trigger the day, right? That's a pretty big move. So hopefully we get some more movement overnight and then good momentum move during the day to trigger that, because we do want to try and start the push back to the upside. There's not a lot of magnitude on that move though, right? It triggers at 41.32. Magnitude is 41.66. So we did go ahead and list out some extended targets for you as well. Now we talked about on the week, we have gone 2 up, 2 down, triggered at 41.06. We already reached the magnitude of 39.46, which then triggered a combo 2 up, a 2 up combo 2 down. And we'll put that in bold because we're back in force. We're back below this 39.46. That reached the first magnitude. And then the extended targets for that 2 up combo 2 down was 36.45, which we reached today. And then we've got our extended targets here, ending with the 32. I don't know why that's 32.07. That should be 32.05, which is again the low of that 3 or that bullish engulfing candle that we talked about on the day chart. All right. On the month, we talked about we're still inside. We've got to breach 28.12 to the downside to trigger anything to the downside. And we've got to get 50.19 to trigger anything to the upside. So, I don't know. We could probably end up finishing this month as an inside month. But, we'll see. Still some days left. And, SOXL can certainly run. So we'll see where everything ends up by the end of the day on New Year's Eve, right? New Year's Eve. For the quarter, we talked about we did trigger the 1 combo 2 down, combo 2 up. We were not in force as of the close, but with overnight activity with Micron earnings, we're back in force just barely. So we are above that 36.15 level, and the ultimate goal is 70.08. But we've got to keep with reality and make sure that we've got different levels on the way up to that 70.08 target, where we have to take note that we could see sideways action or pullback, right? So we already saw the 48 79, and then once we hit that 50, that's when we started to get this pullback that we're in now. So it just goes to show, we have to have these intermediate targets on the way to that magnitude. And then on the year, we talked about, we did trigger the 1, 2 up, 2 down, but we were able to make a higher low, back green on the year, and just trying to finish as high as we can in that year candle, so that we have the best possibility of going 2 up, as soon as possible in January 26, which would then give us that 2 down, 2 up for the year, and give us a magnitude or an ultimate target for that move of 70.08 that goes in play with the quarter. So, that's what we've got here. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. Hope everybody enjoyed the video. Again, we just try and jam in as much information as we can without taking up too much of your time. It's a free video. Excuse me. It's a free video. So we just ask that you give us a free thumbs up in the end, to show us that, the information we provided was beneficial to you. Again, it really helps the channel grow, and we'd like to spread our trading style out to those who might find it beneficial, right? We're not saying this is the trading style for everybody. Everyone has their own trading style. But some things do overlap. Some people could pull certain aspects from our trading style and add to theirs. But again, we just want to try and spread our word, spread the style that we have and the information that we can provide. Again, all for free. So if you can give it a thumbs up, it would really help the channel grow. And we'll just close the video out like we do every night. If you're watching this video Wednesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow, ready to trade. If you're watching this Wednesday morning, Wednesday during the day, we do see some people watching the video after the day has opened. If you're watching this Wednesday, we hope you got some good rest last night and woke up refreshed this morning, and we look forward to getting out there and trading with you.